gold then.
Yeah.
One of the narratives of some of the panelists at this show that we're attending currently, the Vancouver Research Investment Conference, is that we should be investing in gold because we can't trust the banks. Now, you're the founder of a bank.
Right.
How would you respond to that narrative?
Well, if the banks that you're talking about, in particular the central bank, I agree wholeheartedly. I also agree that most very large commercial banks don't have the interests of the customers in mind. Whether or not that's good or bad for gold is a different circumstance, and we could have a long discussion about banking. As you know, I'm a career banker. I think the principal reason why one owns gold is the inevitability of the decline in purchasing power of the U.S. currency, of the Canadian currency, of
Right.
the euro, of the yen, of
Right.
the renminbi.
Right. What about this argument? I'd rather, as a long-term hedge against the devaluation of fiat, just own banking stocks because everybody needs a bank.
Well, I'd be hard-pressed as the founder of a bank and as an integral part of 7 preceding banks to argue with that. Banking is a very, very, very good business.
Right.
You need to understand how to analyze banks the same way that you need to understand how to analyze mining stocks.
Yes.
If you buy banks as a class without knowing much about banking, it is very likely that you will experience a decline in your net worth. Mm-hmm. If, by contrast, you understand the banks for what they are and you learn how to analyze them as individual businesses,
Yeah.
banking, with the possible exception of property and casualty insurance, is the single best business on the face of the earth that I know. It's a wonderful business.
Why is that?
In the current market, in the U.S., your retail cost of funds is 4.5%.
Yeah.
And you are putting out that money at prime or prime plus, which means you're taking in deposits of 4.5%. You're lending that money out at 8.5% or 9%. Mm-hmm. You are leveraged 9 to 1. So if you enjoy a 2.5% spread on assets, and you're leveraging that 10 to 1,
Yes.
your returns on equity are insane.
Yes.
All you have to do, well, you'd have to do 2 things. You have to not allow your expense ratio to get too high.
Yeah.
And you can't make lending mistakes. You can't make too many lending mistakes. If you do those 2 things, you don't have to be the hyper genius that too many bankers try to be today. Mm-hmm. You have to pay attention to the fundamentals of banking. You have to lend to industries that you understand. Mm-hmm. You have to treat your customers, your depositors well. You have to make very sure that you don't make very long-term loans.
Yes.
That are funded with overnight deposits.
Right.
So you get caught in the interest rate trap.
Yeah.
If you mind those P's and Q's, the basics of banking, the 400 basis point or 450 basis point gross spread, the 2% cap on non-interest expenses, and the fact that you secure $1 worth of assets with 7 or 8 cents worth of equity, mm-hmm. makes it an extraordinarily good business.
Yes.
If you just don't make mistakes. A good banker in an economy where there's too much competition shrinks his balance sheet.
Do you care if the Fed funds rate is, by you, I mean a banker, mm-hmm. care if the Fed funds rate is 5% or 0?
Sure, because it goes to the underlying strength of the economy.
Okay.
I'm not concerned about it in terms of my credit spreads.
Right.
I'm concerned about it because my customers need to be able to pay me back.
What is the future of retail banking in terms of the products that you offer? Suppose I were to say, Rick, I like to deposit gold in your bank or use gold as a collateral, as a loan. How would you respond to that?
Part of the business plan of Battle Bank is that we will be the first major U.S. chartered bank which will offer credit facilities secured by retail holdings of gold and silver.
Interesting.
I consider gold to be a really, really, really good piece of collateral.